Hello, everyone. Happy Sunday. Simon here again with AvaTrade. I want to welcome you back to our weekly webinar. And of course, I want to welcome the new people that this is the first time for you. And for those of you that starting with our webinars, just a few words. And as always said, it all says in the title, weekly trading plan. And what we're trying to do here is really create a structure, create a plan, try to pay attention to what's happening in the market in the big picture, what's happening in the upcoming week as far as the events, and trying to make sense of it and put things in an organized way. Also look at specific instruments from the technical point of view and maybe establish some plans as far as levels and so on. So that's what we do. This is me, Simon Friedman. I'm a senior account manager at AvaTrade. My background, it's over 22 years now in the trading world. I started as a professional trader, proprietary trader back in New York. I've done it for about 11 years, and after that, I moved to do different things that includes mentoring and educating other traders. And currently, as you know now, I'm account manager, senior account manager at AvaTrade. So that's a few things about myself. And the agenda of the webinar is pretty much the same every time. It could be we might switch places, but we go through indices, stocks, commodities, Forex, and so on. Now, these are the channels and the ways to keep in touch with us. You have Telegram channel, you have Twitter, you have YouTube channel, which I always advertise a lot because I think YouTube is really great. And we do put a lot of effort of posting and placing a lot of information there. You can find a lot of educational videos. You can find the webinars that are being recorded, including this one. And I highly recommend to subscribe and also click on the notifications and that funny bell there, so you'll be notified when new things are coming up. And of course, the risk warning, as usual. What we do here, you can find the full disclosure later on. What we do here, it's not an advice. What we're trying to do here is really give you education, discuss the markets, and of course you need to use your own opinion and not to consider this as any kind of advice. Okay, before we get here, what I would like to talk about is actually what's happening in the big picture, right? And the whole week we'll be talking about it. The whole week there was a lot of actions in the market. As a result, the indices, really the equity market had a terrific week, unbelievable week. Dow Jones went up 5.4%, S&P is up 6.4%, and Nasdaq this time was the leader. It climbed 7.5% in 1 week. So that's really an amazing result, and we'll be seeing the charts in a moment. Of course, before that we had a huge sell-off, and this jump was kind of overdue in a way. And why did it happen? Of course, we can see, okay, market was oversold, the buyers came in, all the slogans that we can throw into it. And actually what analysts are saying that the speech of Powell in front of Congress really added some positive things to it, even though he said not such a great things, but it kind of calmed the market down. He said that there's a possibility of a slowdown and so on. And it looks like when he speaks, the market really gets a little bit of calm. So, and that's what's happening. Also, the expectations on the interest rate increases are a little bit cooled down. So investors and the traders took it as a positive thing as well, and they came in. And of course, the end of the quarter, the fund managers, of course, the buying and selling, there's reshuffling going on each quarter. So something that behind the scene. So that's one of the things. So we said the indices jump. This fear of recession is there. The high inflation is there. The energy crisis is there. Especially Europe is really suffering now, especially Germany. The war is still continues, unfortunately, and it adds more pressure economically, politically, and of course the human factor, unfortunately. So those things are still there. And let's move to economic calendar, and let's take a look what we have in economic calendar for the upcoming week. And again, I'd like to repeat it again. What I take here, I take only high impact events for the week. As you can see, they're all in red. And there are more events, and I highly suggest that if you're planning on succeeding in trading, that you should be aware of what's happening so you don't get caught by surprise. You be prepared. You can choose you can choose the countries and events that kind of relate to your trading. For instance, if you trade British pound, you want to see the news from UK. If you want to trade euro, it's mostly related to European news, and so on. Just an example. So Monday we have durable goods orders from US, and we have a lot of speeches of ECB President Lagarde this week. We have him on Monday, and she speaks again on Tuesday. It looks like she speaks again on Wednesday. It could be a mistake, but it looks true. This is from the official source. So also Powell's speech on Wednesday is coming up. We have a GDP numbers from US. We have a CPI numbers from Germany, retail sales from Australia, Bank of America governor's speech as well. Wednesday we have 3 speeches, so it's Lagarde, Bailey, and Powell speaking the same day. On Wednesday it's going to be a busy day. We have manufacturing PMI from China, very important number. GDP from UK, retail sales Germany, manufacturing index from Japan, manufacturing PMI from US. And this is what's happening in upcoming week. Okay. Now, I just want to show, before we go to other charts, I want to show this is the chart of a 10-year yields, the U.S. Treasuries. So last week we spoke about it, that we've been holding the 320 after this move, and then the moment we really failed to hold, that's what the market really moved higher. So this is reflecting on the inflation and the fears of inflation and so on. So the yields dipped. We touched almost 3 this week. That was on Thursday, and Friday was a little bit up. So just to illustrate what's been happening on the inflational front, so to speak. Okay, so let's move now to the platform. This is MT4 platform, and we'll start from indices. S&P 500, like we said, S&P this week, just to show you the weekly chart, had a really amazing week. We went up 6.4%, and we pretty much closed much higher than the previous week falling week. So we closed higher. So now let's go to daily chart. Now what's on the horizon? What can we make out of it? And also specifically, just to give us another point of view, I put the Fibonacci retracement here from the peak that we had in March 30th. That's the beginning, after making a high, and from that we just went straight down with, of course, with actions up and down. So we are on the way maybe to retest 38.2, and I read few. And again, just in general, why am I always talking more about S&P 500? You can take any publications, any researches. This U.S. index is being used as a general indication where the financial markets or the equity markets are. Some just call them futures. In my years when I started to trade in the year 2000, we just called them futures. And before we came as a day traders, before the market opened, we always ask what the futures are, where the futures are. So always up 17 points, 20 points, whatever, or down. At that time, the market was selling. So So S&Ps are the general kind of indication where the equity markets are. So we are on the way up, and again, Friday was a very, very strong day, and we closed at the highs. And if you remember, sometimes I bring this up. If Friday closes higher than Thursday, especially we close on the highs, there's a strong indication that we might continue to the upside, and it could happen probably on Monday. So what to expect? First of all, we might go and hit the 50 moving average here. This is the green line. Okay, so this 50, 100, and 200 moving average. That's number one. Number two, Fibonacci retracement. This is the 38.2, the major one. We might actually go to and touch that level as well. So it's pretty much about the same level here. Now, some analysts expect S&Ps to move higher, maybe to around 4150. It also could be happening. That would be about 50%, a little bit higher than that. Retracement also a possibility, but for this upcoming week, judging by this move, unless something terrible happens, I hope not, we might actually see continuation to the upside, and of course we might start having resistance at some point and not reach the 50 moving average. But in general, it looks positive. It looks for continuation. So this is S&P. Nasdaq, the same thing. It's a little bit closer to 50 moving average, and had a very strong week. And of course, also closed on the highs. And Dow Jones, the same thing. It's a little bit farther from 50 a day moving average, but it's on the way there. So if you take European indices, DAX only on Friday had an up day. They're really facing a lot of issues with gas. Russia cut a huge amount of gas for entering there, and I think they declare some state of emergency and so on. I'm not sure about specific details. FTSE, if you remember, I mentioned FTSE after this huge drop. We were expecting a nice move to the upside, and Friday was a very strong move. Pretty much erased the whole week of losses in 1 week. A super strong Friday. French index, the same thing. We went away to possibly closing the gap. Nikkei, also very strong. We right at the 50 and 100 moving average after Friday move. And China, finally, China did what we were talking about. We said if it would start closing about 14,000, we'll continue. It did close, then it went right below. The following day up again, and we had a very nice strong closing, and we closed right on 200 moving average, and around these levels here, that possible we might be facing a resistance in the upcoming days. It was a nice move. So indices, again, let's just look at one more. Nifty 50, take a look. It hit this level of support. There was a resistance first, and then we broke through it, and then we came. We had 2 consecutive weeks hitting the same level, and last week was very positive, and we bounce off this level. There's a possibility of continuation, and also as other indices, especially US, may be hitting a 50 moving average here for Nifty. So that's as far as indices. Again, just to put it all together, very strong week. Again, just to remind you, percentage-wise, S&P move up 6.4%, Dow Jones 5.4%, and Nasdaq climbed 7.5%. Okay, let's take a look at some stocks, and we'll take a look at the major ones. Google had a very nice move up, and again, we'll see a few of them, and it looks like we came on majority of series stocks, we came to a very serious level of resistance. If you take Google here, resistance, we're like a triple top now. So we are above 50 moving average, but we're facing very, very strong resistance here. Apple, we didn't get there yet, so Apple has a possibility of continuation possible together with the indices hitting the 50 moving average. Facebook, it didn't really have any moves on the initial move, the market higher, but in the past few days, we broke to the upside, and we closed almost at 170. So we might continue higher, but that's what caught my attention last week when the market initially bounced. Facebook really sold, so that's not a good sign of weakness. Now Tesla, of course, a lot of controversial things around it. Some of the analysts actually lowered the target and tried to pay attention. We're now at 735 closing, but the target they lowered from 1300 to 1200. So we're still about a little bit less than $500 away from that target. So if that makes sense, that Tesla stock might actually have a nice run to the upside, and they have a target around 1200, some of the analysts. And of course, Twitter story is still there. We had a nice base here, couldn't break lower, and then went way higher, but it's not really rushing to the upside. We are struggling here with a 100 moving average. There's a possibility that we'll have a move up. Now, a few stocks that I kind of follow, and there's a nice possibility there. Uber, we spoke about Uber, I think last week, that it's been really selling off, and it's been holding here around 21.34. We dipped below, and now we're on the way up. And again, just to remind you, I tend to remember things that was said. And if you remember a while ago, we spoke about Uber. The CEO was super bullish on the 2022 for the company. And then we sold really hard here. So there's a possibility of a move higher if the market continues. First, we could hit the 50 moving average, and that's nice. That's probably around $2-3 from now. And if that continues, we need to retest this 26.50 area for the stock, which is also around $3 away, which would be a nice profit percentage-wise. So that's Uber. AT&T, I talk about it on a weekly basis. It's a beautiful play here. Take a look. We had the triple bottom here around $18-19, and then the whole week, starting Monday, we had a nice move higher. And I guess we are about the 50 moving average. We're right between the 50 and 100. So we might be going on retesting 21.34 level here, 21.50. And if the market continues rallying, which some analysts actually predicting that we're going to have a summer rally here, and this was the beginning this week, I really don't know if that's the truth. Fundamentally, things don't look that great. But the analysts, I guess, they're getting paid for talking. We like I said on AT&T, we might come higher to retest this level over here. Now banks, they all had stress tests done, and historically around the stress test time, it's a bullish time for banks. So Friday, we had a nice move finally after this sell-off, and building a base around 1180 on JP Morgan. Citibank, similar idea. We had kind of a triple bottom around this level, 1, 2, and 3. We might start move to the upside. Goldman Sachs was a very nice opportunity here for those that follow the stocks. Around 277 to 78, we built a very nice support here, and it moved higher. So from this level, we had what $15, what $24 move in 2 days. Beautiful move to the upside. So that's as far as the banks. Amazon, even Amazon actually picked up its behind, if I'm allowed to use that word, from 101, and actually had a nice move higher. So we might continue, but again, a 50 moving average is kind of a major checkpoint for the stocks and indices for the upcoming days and weeks. So I mean, in this case, days, I guess. So that's as far as the stocks. And let's move to commodities. And we'll start with energy. crude oil also on all this excitement, and like I shared with you last week, when the market is selling off, the demand shrinks, and the oil had a really sharp drop here. We came to the support around 103, 104, even below. We touched, I think, on Wednesday, 101.5, 101.53, and then we bounce. So if the market continues higher, that could give a little bit more hope on the demand side for the energy, of course. So crude oil bounces, and it's important to know where we stop. This recent drop stopped at 101.5, so this could be a next level. I'm just going to set up that level here, 101.5. It's going to be our kind of a level of support. Why it's important for the trader to know the levels? Just give an example, okay? And it's a practical thing. For instance, let's say next week starts and oil selling, and you see like a heavy selling on the small time frame, 30 moving average or whatever, 30 minutes, 15 minutes, 1 hour, 5 minutes, whatever you trade. And then you have this level set up here. So you see the drop. Again, this is a hypothetical example. Why important to know the previous levels? Because we stopped here for a reason. That means the buyers didn't really let it slip lower. So imagine you see a drop, and then everybody panics. But you know that last time we stopped 3 days ago, 4 days ago, we stopped right here, 101. What was the low here? 101.53. So some traders like to put limit orders here, a few cents higher, let's say 101.60, 101.70. So they're trying to get in when everybody panics, and that's what the big guys are doing. When the whole public is panicking, they're buying because they stopped here for a reason. So there's a big chance it will stop here again. Of course, there's no guarantee, and we can slide lower. So that's why you need to have a plan B in play. So if you're entering 101.50, 101.60, you want to know what's your stop level, what's your risk management, what's your pain tolerance. I like to call it in a simple way. Okay, and it would be nice if you enter here. The trader enters, and it's a nice bounce. So let's say you risk 10, 20, 30 cents and you make $1, $2, $3. That's an amazing thing, 1 to 10 possibility. Again, this is ideal scenario. I'm not saying it's going to happen, but just give you an example why I am putting these levels, and I usually keep them there. And a lot of traders do the same. So history repeats itself. So that's crude oil. Natural gas, same thing, was sold out heavily, and we came to this level here of the previous resistance. Maybe this could be support. Just to give you an idea, we came from 9.5 all the way to 6, almost 6. Well, we hit 6 here. Yeah, 602, and we closed at 6. We closed 617. So again, with all these issues with the war in Germany, choking without gas and so on, we might see the move to the upside again. And also a positive note on the market might trigger more demand as well. Now, heating oil, if you remember, I said the heating oil might catch up with crude oil and sell off. It didn't. So that's a very strong sign. Again, could be anything. It could be manipulation, and now they're going to bring it down like natural gas did. Could be anything. But in general, it's been really holding here. So if the crude oil bounces nicely to the upside here, natural gas as well, heating oil can actually continue to the upside. Just an observation. Now, let's go to metals. If you remember, I always connect China to copper, and China had a very, very strong week. And let's take a look at copper doing. Copper really didn't show any strength, and that's weird. It's really, really strange why it didn't. So, few things. Maybe they're trying to bring it here, the previous support, and test it. They couldn't bring it here. So if you take a smaller time frame, it was selling off, and then towards the end of the market had a nice bounce and it held. So if market continues being stronger and China didn't really give back all the gains, copper could have a nice move to the upside. We are right in the middle between 100 and 200 moving average. So I'll be watching this week. Copper potentially move to the upside. Gold, of course, as the market moved higher, gold really didn't get any actions there, and we are sitting right between 18 and a half and 1850. We're at 1827. We need something serious happening, either with the 10-year yields or the market having one way or another a significant move, or dollar. We'll be talking about the dollar index in a moment. But as of now, gold, it has its moves, but you can see it's very hard to trade it. A lot of tails up and down, a lot of crazy moves, if you want to call it that way. And as a result, we're really ranging. We continue ranging between 1800, 1850, and a lot of build-up is being happening. So something is building up. Which way, we can't really know. Let's take a look at soft commodities. Wheat sold out really heavily, and I don't really know what exactly is driving it to the downside. Maybe the promise of Turkey that they will manage to help Ukraine transport all the wheat that's being stored and not allowed to be shipped by Russians. Really don't know, but from this recent high, which was May 17, we really sold out. We broke through the previous support, and now we're on the way to, we're almost touching 200 moving average. Now, one thing that I pay attention to, that the whole big move started over here around, not around, but March 1st, a week after declaration of, not declaration, after the invasion of Russians. They never declared the war. They still call it quote unquote special operation. And so March 1st, this crazy move up started, and we're actually trading around the same levels here, around 930. So we're going to pay really close attention to it this upcoming week. Corn sitting on 100 moving average. We don't know what's next. We could follow the wheat and try to find some kind of support. So the previous support was here at 720. We are, like I said, we're right on 100 moving average. Anything could happen. Soybeans, the same thing. We retested kind of a quadrupled support here, 1, 2, and 3, and 4 around 1580. So again, we might see the move to the upside as a possibility. Now cotton, okay, it's not the same group. You can't eat it. Sorry for my sarcasm, but technically it looks very, very interesting here. There's a huge gap. I really don't know what's happening. Of course, it could be on China, it could be on anything, but it was because cotton, as you know, is being used in the clothing business, and China is a big producer of clothing, of course. So we had a huge drop, huge gap, and then we just continue lower. And currently, we're touching this strong support that we tried to confirm a few times. So will it bounce right away? Would move lower? I don't really know. I don't think anybody knows, but definitely worth watching for the bounce. This was a huge sell-off, and it could be a nice bounce to the upside. Take a look. We dropped from 50 moving average straight to 200. So now, if we turn around, we might actually have a climb to 200 moving average, or to this previous strong support that we had, and that's a nice potential move to the upside. So we'll be watching that. Okay, so that's it with commodities, and let's move to Forex. And we start as usual with dollar index. Dollar index is really holding here on 104. It did close below 104. The closing here on Friday, 103.88, 12 cents below. Now it looks like we're holding these levels here, and the upcoming week we'll see exactly what will happen. Of course, the next interest rate decision by Feds is being prognosed to 0.75 or 75 basis points. And the dollar, logically, as everybody expects, should be getting more strength. That's why gold is not really moving higher. And we are holding 104. Basically, that's what's happening. So the majors, if you take the major currencies, we are on euro really hitting the head against the 50 moving average. We can't really close above it. And unless we do, we're going to have a hard time going any higher, so possibly even lower from here. British pound, not even close to 50 moving average. It's building after this move down. We're building around 122, 123. Doesn't really have a strength to go any higher. Yen, Thursday had a nice move down. Friday tried to move higher, didn't. And I watch it every week. I talk about it every week. And again, on the personal note, I hope they do something for their own sake, because they're really trying to increase the value of the yen, because the imports are really suffering. They pay a lot of money for things and goods that they bring to the country. Of course, the export is doing great, as the lower yen gives more profit for goods sold outside, but those goods are being produced by the things that need to be bought outside. So really, they trying to bring the yen higher here. So let's see if this week will change anything. But at least we are trading below 135.5, which was this level here. And after the initial move higher, we touched 136.70, I think, high 136.70 up. Then we right below 135.60. And if we are holding here, if we're going to confirm this level, maybe in upcoming few days, around 135.50, that it will show a strong resistance, then we might continue lower. But again, the strong dollar is really hard for yen to gain any positivity here. Now, dollar Swiss franc has been very strong since they raised the interest rate. If you take a look, dollar was really selling against the Swiss, and we are building a support here around 0.9540, 0.9550, and it's right on 100 moving average. So again, if dollar continues strength, we might see the bounce against the Swiss franc. Australian dollar, after this recent sell-off, it's really sitting between 69 and 69.50. New Zealand dollar, same thing, not really significant strength being shown. Now, on that strength of a dollar and the weakness of oil, we had a very nice move recently from 125. I think I spoke about it last week. 125 all the way to 130. It's very, very nice move. Even higher, we almost touched the 131. So again, speaking of levels, take a look. High here just to illustrate the importance of the levels and the repetition. 130.75. That was on May 12th, and 130.77. Like I said, something stopped it to going higher, and the same thing stopped it from moving higher, and it only went higher by 2 pips. So 2 pips, the same pretty much price. That's why I keep the levels, and a lot of traders do, just to know that certain levels really represents possibilities if you use them the right way. So we're selling off now as the dollar got weaker and the oil got stronger. And why am I talking about oil if we're showing USD CAD? And for those of you that are new, there's a strong correlation between oil and Canadian dollar, as Canada is a big producer and exporter of oil. So it's really being affected, the local currency being affected by the price of oil. So what's next? We had a nice move higher, and you know what? We can try even to use some additional tools. Let's use the Fibonacci retracement and see what's the possibility. Okay, very nice. So next level, 38.2. We could find a support here, and it makes sense because we touched that level a few times. This is where there was the recent support. We had 3 attempts to break lower, we couldn't, and then we made another leg to the upside. Okay, that's one scenario, 128.60 area. And if that's not holding, the next one is 50 moving average, which could be also a nice test. And that makes sense as well, because take a look at the resistance here. Always look left the same way you cross the street, unless you're in the UK or other countries where you're right on the right side, on the left side, sorry, of the road. So the rule, you look left, see what happened. So we had the strong resistance here, we had the strong resistance here, we dropped from here, and it looks like this level, it could be the next. If we do break 38 Fibonacci, we might touch the 50 moving average, which is currently around 128.24. Okay, so that's on the major currencies. Again, I hope I didn't lose you all. Dollar index holding up, probably or possibly preparing to the move to the upside. That's why all the major currencies are really not moving higher, anticipating the strength of a dollar to continue. Now, let's take a look on the other ones. USD ZAR, we've been actually playing with the 50 moving average. We closed below, and we could move lower, maybe look for some kind of support. I know a lot of you, especially customers from South Africa, like to trade the local currency, which is really great. You know what's happening in the country, it's easier to understand. So 1560, 1550, it could be the next level of support. Why? We had a resistance, 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 and resistance here. So now we could actually see if that level holds. Now, Turkish lira, after this huge move to the upside and consolidation, we broke to the downside. So maybe the hope is coming from Turkey. I hope really for the people there, because I spoke some friends living there, and people that I know, they really, the economy that's really suffering from this inflation, huge inflation level, and the value of Turkish lira really went down significantly. So this is the level from which we bounced recently, and we bounced again after this move. Now we might continue lower. It could actually, this strong candle to the downside after some playing around, it could mean that the reversal will happen, and we might start sliding to the low over here. So we're gonna go and probably test the moving averages here, 50, 100, and 200. Again, not an easy instrument to trade, but it was a lot of consolidation, then the drop. So we might trigger continuation to the downside, and some strength in the Turkish lira might come back. So that's as far as the Forex, and we pretty much wrapped it up. And let's take a look at crypto world. Ethereum attracted a lot of traders after dropping significant amount percentage-wise. We are on the way up, trading around 1,200 as we speak. Bitcoin trading around 21,000. Recently, we reached the low of 17,581. Okay, and take a look again. Speaking of levels, even on the instruments like Bitcoin, take a look. This move, the initial move higher, started right after this tail here, 17,557 and a quarter, and low here, 17,581, maybe $20 difference. Okay, so it bounced here. Now, what's next? On daily, we had this candle that crossed out the previous day and was sitting on top. We might continue. I'm not here to predict what's going to happen. It just gives us a new range now. So it's between 17,500 and 20,000 currently we broke. So I guess 20,000, that's everybody, all the analysts were saying the 20,000 is a serious level for it to hold. So as long as we're holding about 20, if we speak the same language as they are, we might have a continuation. Now, of course, a lot of analysts predicting high prices and so on. And again, if we see that it comes to 20,000 and bounces, that mean that the buyers are stepping up and holding the 20,000, because here we just broke through it very easily. We didn't hold. Initially, we held it here. It's important to analyze the price section, so I'm trying to help you here. So on the 15th of June, okay, the low here was $20,066. Okay, so we did hold it, right? We didn't broke, so that means the psychological level was holding here. Then we had 2 days above it, and then on the 18th we broke through it. We went all the way to that support that I mentioned to you, and we closed right in the middle of the daily range, and we closed at 18, almost 19,000, 18,929. The following day we managed to close right, so this selling below it or staying below it was really temporary. So the recovery came very fast, and it's a good sign, positive sign that we are actually holding the 20,000, and this was a kind of a shakeout, and we continue holding 20. So again, what traders could do, it might attract a lot of traders, those that are coming in, those that are already holding the position and actually in the losses, they might have a desire to improve the average price by getting in at these levels. For instance, if they're entered around 30,000, buying it at 21, they can really improve the price level. It's not the best play. Again, we could easily go lower, but it looks like we're holding 20,000. So it's simple math, if it makes sense. If somebody enters 21,000 and they put the risk around 19, so risk 2,000 per coin, and if he sees the potential is 8, so it's 4-to-1 ratio, right? So if you're risking 2 to make 8, that makes sense. Again, you need to look at it the way that it should make sense, and it should not exceed your risk level that you have a model for yourself. So that's very simple. Okay, so that's it pretty much with trying to analyze it. Just to put it all together, we did have Powell's speech, kind of a lifting mood of investors and traders. The stocks moved higher, just to remind you again for the third time. It's important to know these numbers just to see the level or extent of move. So Dow Jones moved 5.4% last week, S&P 500 6.4%, Nasdaq Composite moved 7.5% in a week. Very strong. Now, so for us, we need to really understand two things. We might continue to the upside, have a nice rally that some expect a summer rally. I don't know. That's what they say. Or this was a bounce that will be followed by a sell-off, as the risk of recession is there, the inflation is there, the energy war is there, and again, we'll see what happens. That's why we're trying to really see scenarios and plan accordingly. And that's as far as indices. So we did have a risk on week. We closed at the highs on Friday, so we might see continuation starting the next week. That's on the equity markets. Now, commodities, we had a nice bounce in oil. Natural gas, not so much. So we might see continuation to the upside on the energy commodities. Gold is ranging between 1800 1850. Copper had a nice drop, and it didn't really react to the upside yet. So this week could be the situation where the copper have a nice run, especially if China continues and the general equity market does as well. And we had a sell-off in wheat, which might bounce, and the corn as well, and the cotton, a huge drop that we spoke about. And in Forex, dollar is trading around 94. And let's see what this week happened. In the crypto, Bitcoin is holding 20. I want to wish everyone an amazing week. successful, happy week. Also enjoy weekend, rejuvenate, get energy, be happy, be healthy, and we'll be back next week. All the best.